What's up everybody? Today's topic is going to be very uncomfortable one, especially for traders, because today we are not going to talk about indicators, entries or setups. We are going to talk about a truth that most people avoid because it hurts, and that truth is this. Most trading strategies don't fail because they are bad. They fail because too many people start using them. Now at first glance, this sounds counterintuitive. After all, if a strategy works, shouldn't it keep working forever? But markets don't operate like machines. Markets operate like ecosystem. And once you understand this ecosystem, you will realize why almost every popular strategy eventually dies. Let me explain. If you go back to early 1990s, technical indicators like RSI, moving average crossover, MACD and Bollinger Bands were considered extremely powerful. In fact, during the 90s, simple moving average strategies were outperforming professional fund manager. A famous study by Brock, Lakonishok and LeBron in 1992 showed that basic technical trading rules generated statistically significant excess return in the Dow Jones Industrial Average. So what happened? By the early 2000s, the same strategy stopped outperforming, not because markets changed randomly, because computers, hedge funds and eventually retail traders learned the same rule. And once everyone knows the same entry and same stop loss location, the edge disappears. And this brings us to the first uncomfortable truth of trading. A strategy is an edge only until it becomes common knowledge. Now let's take a real world example. In the early 2000s, breakout trading was one of the most profitable strategies in equity markets. Trader would mark a resistance level, wait for a breakout, enter on high volume and ride the trend. It worked beautifully until it didn't. Why? Because once too many traders started placing buy orders above resistance and stop loss below support, those levels become liquidity pools, and smart money realized something very important. Instead of following the breakout, they could use the breakout itself to trap traders. Price would break resistance, trigger retail entries, collect liquidity and then reverse sharply. This is why today fake breakouts are more common than real ones. Now let's add numbers to this. According to multiple market microstructure studies, 70 to 80% of trading volumes in modern markets are now algorithmic. These algorithms are not emotional. They are designed to detect patterns, cluster of orders and predictable behaviors. When millions of traders place stop losses at the same obvious level, it becomes mathematically optimal for algorithms to push prices into that zone. So the second uncomfortable truth is this: your stop loss is not a protection, it's a information. Now let's talk about the YouTube era. Between 2018 and 2022, retail participation exploded. Platforms like YouTube, Twitter, Telegram and Discord made strategies travel faster than ever before. A setup that once took years to spread now reaches millions in days, and this created a new problem. Strategies begins to decay faster. A study published by JP Morgan showed that the average lifespan of alpha in systematic trading has dropped by more than 50% in the last 2 decades. In simple words, profitable strategies now stop working much faster than they used to. But why? Because market adapt. This is the third uncomfortable truth. Markets are adaptive systems, not static charts. Let's look at crypto market for a moment. In 2017, simple RSI divergence strategies were extremely profitable in Bitcoin and altcoin. Low liquidity, low participation and emotional retail traders made price behavior predictable. But fast forward to 2021 and 2024 and those same strategies stopped working consistently. And you'll ask why? Because crypto market introduced something called perpetual futures, high leverage and funding rates. Today, price movement is driven less by spot demand and more by liquidation mechanics. Algorithms don't care about RSI, they only care about where leverage is stacked. And that's why you'll often see price move aggressively against the majority. Because liquidation are more profitable than trends. And now comes the most important insight of this entire case study. Strategies don't stop working randomly, they stopped working structurally. Now, once a strategy becomes popular, 4 things would get obvious. Entry point becomes crowded, stop losses cluster at obvious levels, risk reward become asymmetric, algorithms adapt to exploit that behaviors. And slowly, what was once an edge becomes a trap. And this is exactly why 90% of retail traders lose money. Not because they're stupid, but because they are trained to behave predictably. So you may ask, what actually survives? This brings us to the final and most valuable lesson. Structure survives, whereas strategy decay. Professional traders don't rely on fixed rules like buy RSI oversold or sell moving average crossover. They focus on market structure, liquidity, volatility regimes, time-based behaviors. And these elements don't disappear when a YouTube video goes viral. For example, liquidity will always attract price. Volatility will always expand and contract. Human fear and greed will always exist, even when expressed through algorithms. So the real edge is not in copying strategies. The real edge is in understanding why price moves. And to summarize this entire case study, number 1, if a strategy is easy to explain, easy to copy, and easy to automate, it will eventually stop working. Number 2, markets are not out to trick you emotionally. They are structured to exploit predictability. And number 3, the traders who survive long terms are not the strategy collectors. They are structure readers. So the next time you'll see a 100% working strategy video, don't ask, does this work? Ask a better question. How many people are already using this? And if you find this episode valuable, hit the like button so that more traders could aware about this. And if you want more uncomfortable but honest market case studies, make sure to subscribe to Easy Trader. Thank you so much for watching this video. I'll see you in the next video. Till then, stay solvent.